All right, just moving on to our, of course, our fourth round of our discussions. We talk about the stock picks. So before that, we like to show you again the results of the survey that we've taken when you registered. No, so these are all questions answered by our COL Premium customers who registered to this event. And first is that, what is your exposure? What do you plan to do with your exposure in the stock market for the next 12 months? And 52% mentioned that they want to increase their positions, right? And the chart to your right, we asked, again, our customers, the percentage of their funds invested in direct stocks or mutual funds. And 30% has answered that 50 to 75% of their resources are in stocks or in equity mutual fund, while 34% are in 75% and above, so almost full allocation. So with regard to our recommendations, let's ask April first about her, for those clients who are already exposed, no? What are the segments or at least the sectors that you like that they should probably not consider, or the new sectors that they would most likely try to rebalance into?
Okay. So before that, no, just like to say again, I think Juanes kind of paints what I'm thinking fundamentally. That yes, I think we've seen the bottom, but it's not gonna be a sharp recovery all the way back to 9,000. We're probably gonna stay here. And that said, rather than doing it all at once, buying all at once,
Do you want
do
me to
it
flash the
slowly.
strategies?
That's
Like,
okay.
alright.
So we can just start accumulating. And for those who are still not invested, this might be, waiting for the perfect time. This might be your perfect time already. Okay, so for the sectors that I like, again, we already talked about how much we like gaming and property before. We still like it. Financials, we like it, but before it was expensive. Now it's become cheaper, so it's more attractive. I think what has changed now is um, we have become more bullish on telcos and cement. These are two sectors that we have become more positive on. But on the other hand, we have become more negative on power.
Okay.
Okay, so
Right.
I think those are the major changes. So we can talk about the different sectors later. Okay, so just talking about why we're positive about these sectors. So for the property, we're seeing actually strong take-up sales. I think mga 2 years or 3 years ago, people were worried about weak demand or oversupply on the condominium segment. But the property developers stopped launching for a while. And now the demand is actually much stronger versus the launches. And I think one surprise factor that materialized is the entry of a lot of the Chinese workers working for online gaming operators. They're actually buying a lot of condominiums. The demand is very strong from there. Demand from office, which people thought would dry up because of the entry of Trump, did not dry up. It's in fact very strong. So, so it's not an issue. I think one of the reasons why property stocks are not recovering as much as they should based on the earnings performance is people are worried that rising interest rates will lead to weaker demand. So I think that's one headwind. But I think as long as interest rates don't go up sharply, the demand will still stay strong because the amortizations will not be affected that much if interest rate increases are limited. So for the gaming, we're seeing strong growth in gross gaming revenues, which is the reason why we're not really worried about it. But the risk, of course, is we see weak demand from Chinese players. For financials, we like it because of the strong demand for loans. The economy is very strong, therefore you're seeing pickup in loans. And with rising interest rates, the loans are becoming more expensive. Okay, and what we're seeing is that the pricing of loans are increasing faster than the cost of deposits, leading to higher margins. Okay, but I think, well, the risk is that right now, banks have a loan to deposit ratio of at the 70% level.
Mhm.
It just means that the deposits of people are 70% lent out. Okay, and we have a reserve requirement of 18%. Which is why, if you go to your banks right now, diba, they are more aggressive in, encouraging you to make time deposits at higher rates of, say, 3%. Now, was unheard of before. So, if funding becomes tighter, the margins, they might be forced to um, increase rates, and that would squeeze their margins, no? Okay, so, okay, the telcos, why have we become more positive? I think if you look at the earnings of the telcos, more for Globe, for example, more than 50% of the profits are already data profits, meaning yung mga broadband, yung internet, whatever. And revenues, data revenues are growing double-digit levels yan eh. Whereas yung mga legacy business, which is your SMS, phone calls, whatever, they're now less than 50%. So that's the shrinking segment. So now it's a stronger argument that profits have seen the worst. They're now turning on a more sustainable basis. Of course, the risk is the threat of the third telco player. But for me, since President Duterte started talking about the third telco, a lot has changed. These telco companies are investing 40 billion a year on capital expenditures. The quality of service has improved. Secondly, the cost of data is so much cheaper right now. So actually, I think for us, kasi we have data plans, we don't really know, we don't really feel it, but syempre ang tinatanong ko yung maid ko parate. Sabi ko, magkano ng data ngayon? So, like my maid, she will load her plan or her prepaid plan, 50 pesos. And sabi niya dati, 1 GB lang yon. But prior to 2016, walang 1 GB ang 50 pesos. Ngayon, 1 GB. But there's more, di ba? It's another 2 GB of additional apps.
And unlimited Facebook, mga ganun.
Plus, I think Smart has plus 1 GB per day of YouTube for a total of 4 GB for 50 pesos. So if you're a third telco player, you have to compete with that 4 GB for 50 pesos. How much, diba? The cost is so small, so you're getting very small revenues. You have to compete. So it's very difficult for you to compete today versus, say, 2-3 years ago. The cost is, or the price is much higher. So very competitive for them. For the cement companies, during the first quarter, for the first time, prices have started stabilizing. And because of the build, the demand for cement has been very strong. But my worry really is the imports from Vietnam are still coming in. So, problema pa rin yun. And earnings have not been good so far for CHP because the costs were actually increasing. But at least, one of the major problems, which is the imports high price, or the low price, has been addressed. Okay, and valuations are cheaper. Okay, and for the consumer companies, the positive is we're still seeing demand being very strong. The problem is consumer companies are the most vulnerable to high inflation. First of all, there is always a risk that the demand will be hurt if inflation is high. And second, of course, the cost is very sensitive. They're very sensitive to higher cost, consumer companies. Okay. And for the power, the reason why we've become more negative is because the price of power has been going down because of oversupply of power generation, the power generation sector, and rising fuel costs for them. So bumababa na yung revenues, tumataas pa yung cost, which is not good.
Okay, now so for the 53% naman April that want to increase their exposure in the stock market, what are your picks?
Okay, so I think we have quite a bit. We have some of them are the same, like Ayala Land. We continue to like it. We've been recommending this stock, and of course, it's a well-diversified property company with a strong brand name, and it has a 5-year profit target of earning 40 billion by 2020. So looks like as of today, it's on track to do that. Okay, and valuations, well, believe it or not, the valuations of Ayala Land today is still very attractive. They're trading at 21 times PE, which you might say, well, that's not cheap. But remember, in the past, I remember when I was an analyst in the 1990s, Ayala Land would trade at a premium to net asset value and trade at 30-something times PE. So at 21 times PE, that's a steep discount from the 10-year average of 28. Okay? And of course, rising rates is a major concern. So Mega World is the next property stock that we like. It has one of the best land banks, really, with largest office leasing portfolio in BGC. And in the past, it was more of a property developer, but now it's having a more balanced portfolio, including rentals. Nevertheless, the valuation is still very attractive, 42% discount to net asset value. But let's focus more on the price to book value, which is only 1 times. Ibig sabihin, we're valuing it as if, there's no future, or based on the value of the properties that they bought so many years ago, which of course we know is not the reality anymore, diba? And in terms of PE, Ayala Land is 20 times, this one is 9 times PE. So very, very cheap stock. No? Okay, then Bloomberry, we still like it. The leader in the gaming sector. Profits are growing strongly, and in terms of valuation, we think that it can still trade at higher valuations because the industry average, which includes the Macau players, is at 12 times EV over EBITDA, enterprise value over EBITDA, and Bloom is at 7.8 times EV EBITDA. Okay, so Metrobank, which is, it has been sold off quite a bit because of rumors that it was victimized by a new loan scam, diba? But I think the main proof that, diba, they denied it. But of course, people are gonna say, so what? I'll deny everything naman eh. But I think the major evidence that it really wasn't hit by it was at 69 pesos, you saw Alfred T buying 5 million shares of Metrobank. So why would you, as an insider, why would you buy that stock if you feel that you really, you were lying, So that said, valuations are very attractive. It's at 1.1 times price to book versus your BDO at 1.8 and BPI 1.7. Okay, and Security Bank, this is a relatively new stock pick. It's actually one of the favorite stocks of institutional investors that have re-rated recently because it has successfully transitioned from a trading bank into a lending bank. Okay, so it focused on the consumer segment, and this is bearing fruit as lending to the consumer segment has been growing quite a bit, and this has allowed its margins to improve. And it's currently trading at 1.3 times price to book, which is more than 1 standard deviation below its 5-year historical average. Meaning that during the 5 years, it traded at a premium to 1.3 times price to book, I think 86% of the time. So parang 15% lang of the time siya nag-trade below 1.3 times. Okay. So DNL, I know I said I'm not too optimistic about consumers, but for DNL, the reason why we're more optimistic is in terms of raw material costs. its raw materials are actually not increasing in price because bulk of its raw materials are coconut oil and palm oil. Napababa yung presyo. Unlike, say, the others who consume, say, chicken or beef, napataas talaga yung price, di ba? And it's also more resilient to the weak peso because it has exports. So neutral, it's not going to be affected by the weak peso. And valuation-wise, it's trading at par with other peers, not despite the fact that its earnings growth is faster. Okay. And then Semirara. Okay. It's although we're not too bullish on power companies, the reason why Semirara is different is because it owns its own coal supply, because it owns a coal mining plant, and this is offsetting the weakness of the power sector, which is good. And it's only trading at 8.4 times PE, and the insiders are buying this stock. Okay. And AC, well, it's a well-diversified holding company. Okay, and it's, it's entering into power, and looks like that planned entry is actually yielding some success, giving investors another reason to buy AC, because the criticism is all its subsidiaries are listed anyway, so what's the reason why I should buy AC? Okay, so valuations again are cheaper than the historical average. Okay, but right now medyo nagrally na siya eh. So let's wait for share prices to pull back before we look at this again. Okay, and between the two telcos, our preferred pick is Globe. Because si PLDT kasi, less than 50% of revenues are in the data business, but Globe more than 50% na. So mas nauna si Globe, kaya mas gusto natin. And in terms of mobile, it's the clear leader versus PLDT Smart, no. So yan. And again, competitiveness against potential third telco is much stronger at this stage because of the 40 to 50 billion capex that they're spending now. Valuations, well, I think medyo malaki na rin rally, pero if it corrects, definitely it's an opportunity to buy the stock more. Okay. And then Eagle Cement. Well, Eagle is our preferred cement pick because it's more efficient compared to the others, making it more competitive. And it plans to increase its production capacity, which should allow profits to also grow faster. But again, the valuations, medyo, the stock has gone up. It's not as attractive, but definitely if this stock pulls back, it's an opportunity to buy Eagle.
Right.
So yeah, that's just a summary of our stock picks. So I just want to point out, because we added Eagle and Globe, we just feel like there are still some risks there. So maybe if you want to add this to your portfolio, you should manage the size, limit it to say 5% of your portfolio, because, well, for telcos, operation-wise, I don't think there's much risk. But of course, if you have the government every day saying, we want a third telco to come in and all of that, it's not exactly good for the stock. So we want to limit it at a certain amount. And for cement, I'm saying, the sector is not yet perfect at this stage because the imports continue to come in.
Okay. All right. So thank you very much for those picks, April. Now let's move on to the discussion with Sir Juanes. So before that, let me again talk to you guys about the results of the survey that we asked our customers. So we asked all of you, which type of stock do you think will do best in the next 12 months? And 50% of you mentioned the blue chips, which apparently over the last correction was the ones to suffer the most. 28% says growth stocks, while 15% says the value or cheap stocks, while only 7% talk about the small caps. Now, Sir Juanis, a quick question. For people who asked about the blue chips, what do you think are the good mid to large cap picks that we can consider, at least in a technical perspective?
All right. I think in the next few months, you're going to have a very split market. That means you're going to have a mixture of blue chip or middle-sized and even small cap issues all move, but they may do so rotatingly. And the reason for that is because some of these other bigger issues are probably just going to make a technical rally and then come back. I still think that loose money will find their way in the exciting issues, the ones that you think will only be 7%. But I think the underlying factor, like I pointed out earlier, is that we need to be able to see substantial evidence that these markets have been able to stabilize already. So what I'll do is just give you a sense, I'll present 4 issues that I feel are showing those signs of resurgence, or at least of a basing pattern, and I'll explain to you why I see it, and so that you can look for companies that look quite similar to them, so you can do it on your own. So for example, let's have a look at Globe Telecom. As April felt very, of course, solidly about the recovery coming from Globe. If you notice the orange line or the orange chart there, again, you'll see a downtrend line broken with the first surge in Globe. Mind you, this took place quite earlier in the year, so the Globe's movement is way advanced than the rest of the market. So you see the first surge that you see up there, and look at that consolidation pattern, which is one of the things I pointed out to you earlier on, right? So Globe did exactly that this year. And recently, it's pushed up above that wedge-like pattern, and it's, well, right now, very, very strong on its ascent. And that particular condition is really telling you that this stock had bottomed out because it's gone through the consolidation phase already, and it's now pushed above. So I would agree with April, though, that you might want to wait for Globe prices to come back down before you'd be picking it up. But at least it tells you not only is the worst over here, but Globe's trend is already on the up move, right? So these ones, every pullbacks you get for Globe are opportunities for you to be able to buy that. But again, just look at the basic sense here, because I'm going to go to the next issue here, which is MPI. Now, MPI looks like the same kind of pattern that you're seeing here in MPI's end as well. The only difference is it's not broken out of that triangular pattern yet. It's still locked into that consolidation zone. This is the reason why the other day when MPI rallied so briskly, next thing you know, it flooded itself down 2 or 3 days in a row as if the sellers were so in a hurry to sell. And the reason for that is because the basic accumulation phase is not finished. Whoever is accumulating this, and I don't mean one person, whoever is accumulating this still needs time to accumulate the shares. And there's a lot of shares of this available. And that's the reason it takes normally a little bit longer than usual. So anticipate that you're going to see that cascading flow until perhaps maybe even the latter portion of the end of that triangle. Once it moves above that red line or breaks out from that red line, you'll probably see a much more intensification process. So my advice to you is, now that it's still down here and whipping back down, try to take advantage of it, buy it gradually along that channel. When it breaks above that red line, you have to be a bit more aggressive in your purchases. Next slide, please. So the next one is SM. Now, I notice SM is still on the top tier of your valuation band, as I know, to your historical average. So valuation-wise, maybe not very, very nice. But one thing I liked about it is that, of course, the decline in the beginning was very sharp, but it was more gradual on its turn. And eventually, the downtrend has already been broken. So again, I'll do the same thing what we're doing in global. Wait for this to pull back, and I'll look for opportunities to buy SM into that type of a pullback, because it seems like the worst is over. So hopefully here, the worst is it'll come back down, make a higher low, and then try to be able to gradually resurface. In MegWorld, I also like the formation, but a bit more self-composed. Here you may have time. It's here trying to rally, and you're coming closer to resistance right now. So I think I'd buy this on the way down rather than where it is, because you might have some downside impact for this. I think it just needs to wind up a little bit more for MegWorld before it resuscitates itself. You can be more aggressive, perhaps as it pulls back down closer to support, or maybe later if you want to put in a trading position for speed, you wait for that red line on top to be able to handle itself. But so far I've seen basing formations from these 4 already, and I think that's a very good sign, at least for the long haul. So take advantage of any pullbacks you get from these particular 4.
All
In
right,
terms, yeah, in terms of the smaller league stocks, okay, okay, before I do anything else here, the usual disclaimer, okay? These are only for the people who are in fit of health. Movements here can be very volatile, okay? And that means as fast as it can go up, you can probably get a surge down in prices as well. So you might have to be a little bit more careful with these things. Okay, so let's look at 4 issues that I'm seeing interesting patterns build again. But let's start with the first one, which is TBGI. And here in Trans-Pacific Broadband, I want to be able to show you how to watch for these stocks. If you're going to run through them anyway, you might as well know how to do it in better fashion, right? The very first spike you see on the left side, normally these are very spontaneous. They catch people off guard. They go up very fast because no one is able to buy. And so you're forced, if you want to participate, to buy it higher and higher and higher every day, up to the point that it seems it's never coming down. Until the insider, the guy controlling this, is going to say, wow, you guys like this company better than I at this price, so I will give you everything you want. And so that's why the major correction comes back down. And now you get that big pullback. And after giving somebody the opportunity to make so much money, that person says, all right, it's falling quite a bit. They've gave me all this extra money. I will put my interest back. And that's why it starts to round or flatten off. And that's what you see, that part where it says the wind down area. After that wind down area, supply will tighten once again. And after its supply tightens, you see the next race that comes up, and you see with that pitch and pull movement that's going to come. It shoots up again, and then after it shoots up, it starts to prepare the next pattern. So since we're at least in the first chart, we're now in that first area. Now we're waiting to see if prices can resuscitate itself from that area. So if you guys are trading stocks like this, you have to be mentally prepared that if you're going to participate here, then you're going to have to put a little bit of a stake now. Because you don't want this to do it whilst that thing is erupting like a volcano, because you'll be paying all the lousiest prices for it. Now, as it comes to be able to do that, you cannot put too much money here because there's a chance that could still break down. So you have to put a little bit of a position there so that when it starts to be able to push off, you can add and you can get a pretty good average price and ride a relatively fair amount of these particular movements. But look at the phase of involvement, because later you will see the movements are pretty much the same no matter what stock I will show you. The next stock I have there is Now, and just to let you know, Now was one of your top 10 requested stocks. Am I right? Yeah.
Yes.
Okay. So, and as Now comes inside, you try to guess where you are in the first phase. Where am I here? You can see you've not gone into the last pitch and pull phase yet. You're still in this consolidation phase. Now, I know you might be getting excited because the price is right on the red line now, and you might think, oops, it might break out already. But remember, look at the first chart. It went back to that red line. It had one more pullback to support before it broke out. So that's why over here, don't be putting an aggressive amount because you might think, ako na lang mag-breakout nito, tignan natin kung aandar yung barko. Please, don't put too much until it's time, okay? There might be one more swing for Now before it even attempts to be able to move on. Another 2 stocks to be able to watch out for is, well, please remember, I'm telling you things, there are absolutely zero fundamental involved there that at least I know of. I know there's a lot of rumors going around with all these companies, but these are not fundamentally based picks. That's why April's not talking about them. Okay, but here's another issue, same thing. First upsurge, major sell-off, wind down with the base out, shoots up again, and now it's winding up for an attempt to be able to move back. And again, even in this other one on the right side, when you have Mambuhay doing exactly the same thing. So here in the next few, I would say in the next 1 or 2 weeks, we're probably going to get decisions from some of those smaller issues. So for those that break out, then that might be something you might want to be able to trade with a small amount of your portfolio. Yeah. I said small, not small, small. And that's what you guys are going to have to be able to watch out for. Now, I think there'll be activity here because, like I said, markets will rotate. Right. Some of the blue chips that just rallied and take some profits from these rallies, I'm sure money is going to come here. So even a little bit of money coming in here might inspire some activity so you can watch some of these issues inside.